Hey, welcome back to the deep dive. Today we're diving into something that's sparked a lot of curiosity for us. What really sets trading apart from gambling?
Yeah, it's a great topic.
Yeah.
Because, on the surface, you see the element of risk, the possibility of winning or losing in both, and it's easy to just lump them together.
Exactly. But after digging through a bunch of articles and expert views, what's become super clear is that the way you approach them, the mental game, and what you're actually trying to achieve are totally different.
Hmm.
So our goal today is to really unpack those key differences for you so you can clearly see the contrast between, say, a more emotional gambling-based approach to the financial markets and a strategic trading-based one.
And the material we've looked at offers such a fascinating look into these two worlds. It's not just about the actions themselves, but the underlying thought process and the intentions behind them.
Okay, so let's get right to the heart of it, the fundamental mindset. And from what we've gathered, the core distinction seems to be this. Gambling really boils down to emotion, whereas trading is, well, all about strategy.
That's the key, isn't it? When we talk about the emotional side of gambling, we're looking at decisions that are often driven by hope, by a gut feeling,
Yeah.
or maybe that excitement of a potential quick win.
Right.
Think about someone buying a particular stock just because their friend mentioned it without doing any research themselves. That kind of spontaneous action is more in line with gambling. It's chasing that high.
Right. It's often about that immediate thrill, that shot of adrenaline. And what our sources really emphasize is that in gambling, you're typically not working with a real edge. It's much more about chance, pure randomness. There's usually no systematic plan or any disciplined method being applied.
Precisely. Now, when we flip the coin and look at the strategic nature of trading, it's a completely different ballgame. Trading, as the material highlights, is intentional.
Intentional, yeah.
It's built on a foundation of rules, on analyzing information, on careful observation of the market, and really importantly, on understanding your own psychology. Trading builds a foundation. It doesn't just chase the next win.
We saw that idea come up again and again, things like, studying charts to understand price movements, developing a well-thought-out trading plan before you even make a trade, clearly defining how much risk you're willing to take, and keeping detailed records of your trades.
Yeah, the journaling aspect.
Exactly. It's all geared towards that long-term consistency, not just those lucky one-off wins that might happen by chance.
Which naturally leads us to the role that emotions play in each.
Yeah.
In gambling, emotions are right there in the driver's seat, and often in a way that can be really detrimental. It's that powerful hope for a big payout, that impulsive urge to bet more that really fuels the activity.
And our sources really highlighted that negative spiral of trying to recoup losses in gambling. That emotional hit from a loss can trigger this urge to increase your bets without thinking clearly, trying to win back what you've lost, which can unfortunately lead to even bigger losses, and that whole cycle of regret and then maybe overconfidence after a win.
It's a very reactive approach, driven by how you're feeling in the moment. Now, if we look at it from a trader's perspective, the sources we examine emphasize that successful traders have a very different relationship with losses.
Oh, definitely.
They accept that losses are simply part of the process. It's not about being right every single time you trade.
Exactly. It's about taking a step back from a losing trade, analyzing what happened, understanding why it didn't go as planned, and using that information to refine and improve their overall trading strategy.
Right, learning from it.
Yeah, the focus shifts away from that emotional sting of a loss and towards a more objective, analytical look at their process.
And that's where the critical element of risk management comes into play. For a trader, it's about having a plan to manage that risk effectively on every single trade and consistently following their predetermined system, regardless of whether a particular trade results in a profit or a loss.
This fundamental difference in how emotions are handled really underscores the different approaches to making decisions and dealing with risk. Our sources were clear that gambling actions are often based on randomness. There's no systematic approach that gives the gambler a reliable advantage over the long run. It's really relying on luck, on things you can't control.
Right, it's relying on luck, on things outside of your control. Whereas in strategic trading, we see this strong emphasis on building repetition through consistent actions. Things like keeping a detailed journal of your trades, regularly analyzing your performance to identify patterns, and constantly tweaking and refining your trading setups. These are all about moving away from that unpredictability of randomness and towards a more reasoned, patient, and repeatable approach.
It's about building a framework that you can apply consistently over time. And within that framework, carefully managing your risk becomes absolutely essential. Our sources highlighted that strategic traders base their decisions on clearly defined rules they've set for themselves, on the data they've thoroughly analyzed, on their ongoing observations of the market's behavior, and on a well-defined trading plan that they stick to.
Hmm.
It's all very deliberate and intentional. And just to clarify, defining risk tolerance simply, it's really understanding how much potential loss you're comfortable with on any given trade.
Yeah.
And similarly, a trading plan is basically a detailed set of rules that outlines your strategy for entering and exiting trades, managing risk, and setting goals.
And this difference really becomes clear when we look at how gamblers and traders respond to both wins and losses. It's a key differentiator, really. We've talked about the gambler's tendency to chase losses, but even wins can be problematic, potentially leading to overconfidence and impulsive, poorly thought out bets in the future.
That cycle of reacting emotionally to every outcome is so clearly laid out in the material we looked at. Whereas the trader, as we've discussed, accepts losses as a part of doing business. But it's not just, shrugging them off. It's about that analytical mindset.
Exactly.
They're really digging into why a trade didn't work out, looking for patterns in their mistakes, and making adjustments to their strategy based on that objective analysis.
Again, the central focus remains on consistent risk management and the disciplined execution of their trading system. It's not about letting the emotional high of a win or the emotional low of a loss throw their overall approach off track.
Right.
Building on that core difference in mindset, let's maybe delve into how that fundamentally impacts the role emotions play in each of these activities.
Yeah, and this all ties directly into their underlying motivation and long-term goals. Our sources suggest that for someone who's gambling, the primary driving force is often that immediate thrill of a quick win. There isn't necessarily a well-defined long-term vision or a structured plan beyond that potential for immediate profit.
It's that immediate gratification we were talking about earlier. Now, if you contrast that with the motivation of a trader, it's a completely different picture. It's not about that fleeting excitement. It's about building a sustainable path in the financial markets over time. It's a longer-term perspective that requires a deep understanding and careful management of risk. The ultimate goal isn't just hitting one big score. It's about achieving consistent performance and growth over time.
And that's where this idea of making the shift from randomness to a more repetitive, systematic approach really solidifies the difference. Our sources kept emphasizing that gamblers tend to act on those random impulses, those fleeting tips they might hear, or just a gut feeling.
While traders, through the process of keeping a journal, rigorously analyzing their trades, and constantly refining their strategies and setups, are building up a body of experience and a reliable system that they can depend on. It's about identifying patterns in market behavior, understanding probabilities, not guaranteeing a win on every trade, obviously, but understanding where the odds might slightly be in your favor over the long run, and developing a consistent process that gives them a statistical edge over time.
It's almost like they're making a fundamental shift in how they view the market, moving away from seeing it as this unpredictable casino to recognizing it as a complex puzzle that can be studied, understood through diligent effort, and ultimately navigated with skill, patience, and a well-defined strategy. So you might be thinking, okay, I get the difference intellectually, but how does this play out in real-world decisions? And that's a crucial question.
Absolutely. And speaking of practical tools that can really help someone make this crucial shift in mindset and approach, our sources consistently pointed to the Independent Trader's Workbook.
Oh, that's right. It came up repeatedly as a really valuable resource specifically designed to help bridge that gap between more of a gambling mentality and the disciplined mindset of a true trader. It's like having a guide to help you make that transition.
What's particularly interesting about it is that it's not just about reading theoretical concepts. The sources we looked at really highlighted that it emphasizes doing and actively engaging with the material.
Right, being active.
Yeah, it provides those essential practical elements, templates for planning and tracking trades, dedicated sections for taking detailed notes on your analysis and decisions, and actual exercises designed to help you internalize these crucial concepts and build better habits.
It sounds like it's all about actively engaging with your own trading behavior and really starting to build those essential habits, that strategic perspective, and that crucial framework and structure that characterizes consistently successful traders.
Exactly.
It's a tangible way to actively facilitate that move away from the randomness and emotional impulses of gambling and towards a more reasoned, intentional, and strategic approach to navigating the markets.
Exactly. It's a very hands-on way to begin building that disciplined and strategic framework that we've been discussing throughout our conversation today.
So, to really bring it all together for you, we've seen how the core fundamental difference between trading and gambling really boils down to the underlying mindset. Emotional and often impulsive in gambling versus strategic, analytical, and highly intentional in trading.
Mm.
And that core difference then has a ripple effect, influencing everything from the way individuals perceive and manage the role of emotions in their decision making, to their overall approach to handling risk and making trading decisions, and even to how they interpret and respond to the inevitable wins and losses that occur.
And as our sources clearly emphasized, understanding and truly internalizing this crucial distinction is that absolutely vital first step for anyone who has aspirations of building a sustainable and potentially successful journey in the financial market.
Right.
It's about consciously recognizing the inherent pitfalls of making emotionally driven decisions and actively working to cultivate and maintain a more disciplined, analytical, and strategic approach to all your market activities.
It really makes you stop and think about your own approach to any kind of financial activity, doesn't it? Are your decisions being driven more by those fleeting emotional impulses, that hopeful anticipation of a quick and easy win? Or are you consciously operating with a clearly defined strategy, diligently analyzing the potential risks involved, and really focusing on the long-term possibilities?
It's a good self-reflection point.
Yeah, maybe even just considering how incorporating a little more structure and a more analytical perspective could be the key to fundamentally shifting your perspective and ultimately your outcomes. And for anyone who's feeling inspired to really dig deeper and actively make that shift to a more strategic approach, resources like the Independent Trader's Workbook, as we've discussed, really do sound like a very practical and valuable next step.
It certainly offers a structured path for that kind of self-assessment and development.
Absolutely. Well, that's our deep dive for today. Hopefully, this has given you a clearer understanding of the critical differences between trading and gambling. Thanks for joining us.